Hi all, I wanted to make a quick video regarding market expectations for the week starting on the 3rd of Feb 2025. Before I begin, I would like to mention that this is an educational channel. All content over here is for the sake of education. Kindly read the disclaimer you see on the screen and in the description below. With that said, let's proceed. So we'll discuss on the charts what are the possibilities in the coming week. We'll start with hourly charts. So this is Nifty 50 spot hourly chart. Let's start the discussion from here. So here I've got three moving averages. Green one is 21, blue one is 50, and the last one is, well, the white one is 100. And this is 1 hour charts for Nifty. Yesterday I think there was some glitch with TradingView. I think it's been corrected today. So I think we can rely on the chart now. Now the big question is, even though the government gave tax reliefs for the middle class and the salaried people, why did the market still not rejoice? A lot of theories. The participation was not full yesterday because it was a Saturday. We will get to see the whole results on Monday, so on and so forth. Some people believe Monday will be a bombastic rally. Some people believe the market does not have the required ingredients to go into a rally. So what do you think can happen in the coming week starting tomorrow? The first point I would like to make is, even though the income tax slabs were brought down and there was nil tax till 12 lakhs, why did the market not rejoice? Okay, it was a Saturday, but still there should have been some joy, right? I think one of the main reasons is this is a report available online, and you can see, you can study this report if required. Then I'll probably share this on my Telegram channel, and for members it will also be available on the WhatsApp channel. So you see the total receipts the government is going to get for 25-26 is approximately 34.96 lakhs. The total expenditure is going to be 50.6765 lakhs. Net tax receipts is going to be 28.37 lakh. The physical deficit is going to be 4.4. So what the market is assuming now is the government borrowing is going to go up in this fiscal. That's why the market is not, I think, very optimistic about the budget. Now, I am no science guru, neither am I an economics guru, neither am I a finance guru, but I'm just sharing with you why I think the market did not rejoice. Is probably, okay, the middle class is happy, but is the moneyed class happy or not? That's the main question. Are the moneyed people able to see some questions on the horizon? That's the big question. Plus, there was some talk about the government not talking about capital expenditure. Later on, after the budget, there was a live session where I think the finance minister clarified that capital expenditure will remain where it is. There will be no reduction in that. So that also was clear. Heading into the week, I think there's some global headwinds also. For example, Canada has now retaliated with counter tariffs to the US. US over the weekend had imposed tariffs on Canada, Mexico, and China. And now we know for certain that Canada has retaliated. I'm not too sure about Mexico and China, but you can see videos on the Canadian Prime Minister talking. It's available all over YouTube. So Canada has definitely retaliated. Now, all this may lead to higher inflation, especially for American people and for Canadian people. So, and you know that we also are not, we can't totally detach ourselves from the world. So if US indices will go down, we can't have a scenario where the US indices are going down and Indian indices are going up. Friday also, US 30 ended close to 1% negative. It was primarily because of all this tariff talks. Now, over the weekend, the development of Canada retaliating has come in. Monday we'll get to know how US is going to react to this. So keep an eye on US futures. You will get to see it ticking from morning itself. And keep an eye on global European futures, Japanese futures, and everything. So it's a complex web of things. I think the intent of the government was right. As far as the middle class is concerned, there was a lot of ranting on YouTube by so many people about excessive taxes on the middle class. So the government, I think, with good intent, wanted to address that. However, the concerns of growth, employment, they still remain. Okay, you can expect some growth because of increase of domestic consumption, because if people will have more money in the hand, some more cars may be bought, some more bikes may be bought, some people may go on a holiday and stuff like that. But that is also not going to help the bigger cause, which in India primarily is lack of good employment opportunities. China totally, the progress of China was because of their production capabilities. I don't think, come anywhere near them. Plus, recently we have got to know that China, even in terms of AI, it's almost as good as ChatGPT or any US company right now, and they have done that at about 1/10 or 1/10, I think, of the cost of what it took America to do. So I think the emergence of China is something that nobody can stop. US can probably talk all it wants, but there's nothing they can pretty much do about the rise of China. In all of this mix, where do we stand? We stand, I think, somewhere in between, where we need to focus on our issues. Our issues primarily are lack of good employment opportunities, education, healthcare, our huge massive population, and stuff like that. The fact that our per capita income is close to only $2,000 a year. China is close to 10 or in excess of 10. So considering all these facts, I don't know whether I'm bullish or bearish about the market right now. My heart is telling bullish, but my mind is telling bearish. What are the charts telling? If you look at this Nifty chart, this is a fib channel that I've drawn, where I've taken this top and this bottom. Now Nifty has crossed all the three moving averages and gone up, and this is the resistance it's facing. This purple line is the 50% mark. It's standing at a very crucial level. From here, it can either go up or come down. If it comes down, it will head towards 23,100. If it goes up, it will head towards 23,900. Now, whether it's going to go up or come down, I'm not too sure. But my brain is telling me that it's going to come down. All right. And my heart is telling me it's going to go up. So let's just see. Let's look at Bank Nifty also. It's above three moving averages. It's facing resistance over here. It's already above the 50% mark. If we take this as the high and this as the low, it's already above the 50% mark. And from here, if it goes higher, then it's facing resistance at 49,800. This Bank Nifty, this 800 levels are always very important. 49,800, 48,800, 50,800. All right. So right now it's going to face resistance at 49,800. If it goes past that, then the next level will be 50,400. All right. If it falls back down, then it's going to try and take support at about 49,100 or 150, 200 levels. This purple line over here. Fin Nifty will pretty much follow what Bank Nifty does, so we don't need to run to this. If it falls, it will take support along this purple line, which is at 22,900. On top, it's got resistance at 22,236. Mid cap is still looking weak. It's still trying to, it's not even managed to cross the 50 EMA. It's tried and fallen back. So mid cap is below all three moving averages, which is 21, 50 and 100, and it's struggling to go up. This is the crucial level for mid cap, this white line over here, which is at 11,550 odd levels. If it breaks that, then there can be more deterioration. on the way down. So on Saturday we saw sell-off happening in PSUs, public sector banks too, and all the capital expenditure related stocks, which may revive on Monday because of the clarity given by the finance minister stating that there will be no reduction in capital expenditure. But still, I mean, if the government needs to borrow close to 15 lakh crores in this fiscal, in a high interest rate environment, I doubt the markets are going to rally because of these factors and because of the global headwinds, which now seems to be going into a tariff war kind of a thing. We have not even diffused the situation between Russia and Ukraine now, and now we are getting into a tariff war where all the big ones are fighting over tariffs. With all the things happening, it seems a little unlikely that the situation is favorable for the markets to rally. However, I can be totally wrong. The market has got its own mind. Who knows? Coming Monday, that is tomorrow, markets may go into a rally, start rallying. Who knows? Nifty can climb about 1,000 points. Bank Nifty can go about 3,000 points. All of that is possible. But my only question is, if it had to become positive, it would have become positive on Saturday itself. It was very surprising to see on Saturday that the FIIs did participate and they still sold on a Friday also. So FII is leaving no opportunity. It's using every opportunity when the market is going higher to offload what they own. So there's complete lack of interest from FII. When that will turn, we don't know. And how long can the markets depend on DIIs and retail alone? So stuff like this, I mean, on the one hand, I want the markets to go up. On the other hand, I see that there's reluctance from FIIs and maybe even the big hands to push the markets into newer high at this point of time. So in my personal view, I think the markets don't have the required ingredients currently, and factoring in the global scenario of tariff wars and all of that, I don't think the markets will rally now at this stage. So that's my personal view, and whether that holds up or not, we'll get to know in the week that is coming. But do I want the markets to rally? Yes, I do want the markets to rally. I want the markets to go up. I want Nifty to go up at least 1,000 points. I want Bank Nifty to go up at least 3,000 points, and I would want to participate in that rally myself. It's just that somehow my brain is telling me that that's not going to happen. All right. So in my view, I am not very optimistic, and I think the markets will either go sideways or fall from here. And in my view, a fresh rally is out of the question. So I just wanted to share this personal perspective. Again, I would want to mention that these are my personal thoughts. I don't think I'm qualified enough to give market predictions and all of that. I'm just an average Joe trying to study charts. And I see that when I factor the charts and the global indices, I don't think there's a possibility for a massive rally to happen. This is the daily chart of Nifty. It's gone ahead and closed above this red line. I don't know how correct this data is, but from what I can see, it is closed above this red line, which is a good sign. From here, can it go towards this green line? I'm not too sure, because the green line is at 23,900 and currently it's at 22,470 odd levels. If it's not able to hold this 23,470, then it will fall back and go back to 23,000. That's a possibility. One could also say that yesterday was the peak of the five. This is a daily chart, by the way. This is not the hourly chart. So 0 to 1, 2, this whole thing will take as 3, 4, and then 5 may happen. So this is a possibility. You can consider yesterday being the high of the fourth wave. Let's look at Bank Nifty. It had made a nice W. So again, over year 2, you can probably say that this was 1, 2, and then this whole thing is 3, 4, and now it'll probably go into a 5. That's a possibility, because even for Bank Nifty, it's going to face some very strong resistance over here. This was the level it was first refusing to break. The level is 49,800. For a very long time, it just refused to fall below 49,800. And now it's going to act like a resistance on the way up. 49,800 will act like a solid resistance. And the chances are Bank Nifty may have difficulty breaking that resistance. This red line over here. And if it can't, then it'll head back to 48,500 levels. Mid cap, we'll watch the futures chart for mid cap. The charts are still stuck for mid cap and Fin Nifty. So no use discussing. So that will wrap up my view. I think the market may go sideways or go a little negative in the coming week. I was very optimistic about the markets rallying post the government bringing down the taxes and changing the slabs, but I didn't see that. I didn't see the reaction that I wanted to see on Saturday, and chances are that, in my view, a bullish rally is out of the question. Markets will either go sideways or down. Though I mentioned that I want the markets to rally from the bottom of my heart, but I just don't see that happening. All right. On that note, I'll end this video. I would suggest people to study 1 hour charts with 3 moving averages, just like I'm doing. The 3 moving averages are 21, 50, and 100. Do your own study. That's this chart where everything is on 1 hour. And then we have this chart, which is a custom fib level, and we have automated this. How to do this is available in the membership section. So these charts are automated. When we can switch to any time frame and it will automatically adjust and give out the fib levels. And these are not normal fib levels. These are custom fib levels. Okay. So I'll end this video on that note, guys. I hope you all have a profitable week ahead. Thank you so much for watching. If you are already a subscriber, consider becoming a member by clicking on the join button. It's only 89 rupees a month. And if you're an international viewer, it's close to $1. If you're not yet subscribed to the channel, then please subscribe to the channel. Share this video with your family and friends. Give our videos a thumbs up. Like all our videos. It motivates us to make more videos for you. Also subscribe to our free Telegram channel. The link is given in the description in all our videos. Also buy all your Amazon products from our Amazon affiliate link. It's there in the description section. Once you click on that, it'll take you to Amazon and you can buy any product you want from there. You don't pay extra, but we receive a small commission every time you buy something from our Amazon affiliate link. And I want to really thank, there have been some purchases in the recent last 2 weeks that people have made. I really want to thank my subscribers and members. If you have made the purchase, then you know you are the one I want to thank. And thank you very much for shopping from our Amazon affiliate link. For people who have not yet shopped from our Amazon affiliate link, my only request is you are not going to pay anything extra. However, we get a small commission every time you buy something from our Amazon affiliate link, which will help the channel. All right. Thanks again. I'll see you in the next video. Take care. Bye-bye.